Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a trade that I placed today and alerted to our members here at thetradinganalyst.com, and we're going to go over exactly what took place, and the idea here is for you to learn from this and hopefully take some of these lessons into your own trading so that you can become a better trader. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like the free videos and analysis that we give to you on a daily basis, it's really nothing in comparison to the membership you get from joining thetradinganalyst.com. The best part is it's free to sign up. That's right, it's a free 7-day trial, and once you sign up with that free 7-day trial, you're going to get instant access to the profitable trade alerts like the one that I'm about to show you right now on the S&P 500 options. It's a great opportunity and we'd love to help you with your trading. Alright, so let's take a look at the S&P 500. So this was a day trade here using S&P, the SPY weekly options expiring on Friday. July 28th was the expiration. And this is the 15-minute chart. This is today's action right here. This is what we're going to be focusing on. This is yesterday's action, just to let you know. So this is today's action. This is the open. So we gapped up we gapped up at all-time highs. So very bullish action here. We had a washout low right here, and then you saw this quick reversal right here with this strong green candle right there. I don't share every detail of our strategy because that's reserved for members only. But this is where we got long. We got long right here on the little retrace right here on the S&P 500. And I'll show you that alert right here. You can see that we got long here in the morning. Trade alert, SPY, July 28th. 247 strike calls at 98 cents. And we also send out these alerts via text message because most of our members can't be sitting in front of a computer screen all day long. And I send out the alerts via text message so it's more convenient for everyone. So we got those calls here at 98 cents right there. And just to explain our method here and our strategy is very good and very accurate at predicting the low of the day. Okay, doesn't mean we always get a breakout from it like what happened today, but as you can see, we never broke the low of the day right here. Okay, even though we went kind of got rejected up here at the previous highs right here, we never broke the previous low right there. Okay, so we rode these calls here, riding these calls and riding them all day right here, and we ended up stopping out for a loss right here on this candle right here when we got that close below the 20 period simple moving average. Again, this is the 15-minute chart, so the red line is the 20 period simple moving average. And you can see that it barely closed below it here and barely closed below it here. I like to see a very clean close below that 20 period simple moving average because oftentimes it'll close a little bit below it and then a little bit below it. You can see we dipped below, but we hammered right there, and oftentimes we'll see a bounce off of that right there even though it closed a little bit below it. So I like to see a legitimate close below it, and that's where we got that signal right there. And we ended up closing that position right here for a very small loss, and we sold those at 93 cents. Okay, and so I want to point out this is a 5-cent loss right here, very small loss. So no matter what your strategy is, you don't have to use this strategy. You can use whatever strategy you want. The idea here is, and I know I'm speaking in very obvious terms, but it needs repeating. Got to have your losses be small, and your winners be bigger. Okay, a lot of times traders, especially on the winning trades, okay, the winning trades is where a lot of people have problems, is they don't let them run. And the best way to do that I have found is by using moving averages. Okay, so in this case we got stopped out for a very small loss on this trade here, but oftentimes when you get a nice breakout here, so let's say for example you got long over here. Okay, so you got long over here and your stop is a close, or your trailing stop is a close below the 20-period simple moving average. So got long over here at about 246.50, and then you don't know how long this trend is going to last, but by using a trailing stop, you ensure that you stay in that move for a long time, and that would have been a nice gain had you entered there. So I know that's not a trade that we entered or anything like that. I'm just showing you why using moving averages can be very advantageous. I do not use them as support or resistance or anything like that. I only use them as trailing stops because that is, in my opinion, one of the best ways to make sure that you stay in a stock or an option for the meat of the move. So that's it for the video. Hopefully you guys learned something from this video and will take some ideas from this and implement them into your own trading. Again, if you're not already a member at thetradinganalyst.com, sign up for the free 7-day trial, and once you sign up with that free trial, you're going to gain instant access to profitable trade alerts, and not only profitable trade alerts, also smart trading with confidence. So even on our losses, we're trading with a clear, defined method. And we're not just throwing darts. We have a clear, defined method that we use over and over and over again. And in the long run, we make profitable trades more so than the losing trades. And our winners are much bigger than our losers. It's a great opportunity, and we'd love to help you with your trading.